Hey everybody, welcome back. We're going to piggyback off my last episode here and talk a little bit more about monopolies. I don't know if you heard about Michael Hudson or not, but he has quite a few good books out there. He's been an economist and writer and teacher for quite some time. Um, Back to this one article about the U.S. Federal Reserve says its goal is to get wages down. On the bottom here, he talked about how inflation is caused by corporate monopolies and not labor. So Michael goes on to say here, inflation is basically the excuse that right-wing governments have for have been for trying to lower wage levels by blaming the inflation on rising wages. He goes on to say what economists like to blame it on is in labor, on rising wages, on government, social spending, and of course Russia, trying to break away from America's unipolar international order, Hudson explained. He recalled his time working at the Chase Manhattan back in the 1960s. Hudson's boss was Paul Volcker. And he always said that his biggest concern of finance was the wage gains. And they'll mean that the purchasing power of all our investors who have bank accounts and stocks and bonds will have less power over wages. And our class interest is in increasing our power over wages. So we've got to keep wages down, even if it causes a recession. That's basically the Federal Reserve's policy. So they don't necessarily say they want you on the unemployment line, but if you are on the unemployment line, that definitely helps suppress wages, keeps people from asking for wage increases and other benefits. It also keeps the asking price of current job openings down as well. He goes on to say the president of the Federal Reserve, Chairman Jay Powell, came right out and announced that the Biden administration Democratic Party policy is, quote, to get wages down and then get inflation down without having to slow the economy and have a recession and have unemployment rise materially. Well, we'll see about that. The Fed has a pretty good record on screwing things up. Just like they mentioned, the inflation was going to be transitory. In other words, you want to keep the finance, insurance, and the stock market and real estate sector going. And that's what they're going to try to do. You just want to squeeze down wages somehow. So with the higher interest rates, we'll see. I'm interested in Michael Hudson's response on that. With the higher interest rates, is it really going to be keeping real estate going? We'll see. So the objective of all this is that if labor wants to get a job and the health insurance that goes with it, then labor will have to lower its wage levels. That's the current U.S. government policy, Hudson says. He goes on to say that today's inflation is not only in the United States but in the rest of the world, and how we use Putin as one of the scapegoats that the United States and NATO is using as an excuse for why inflation is so high. And right there, he's referring to the energy costs with the gasoline and everything. Not to mention that we've really hampered down on our on our drilling and everything else with the pipelines closing and everything. It really hurt us as far as energy costs, and has only increased prices across the board. Michael also goes on to say you're going to have a rent rising as a result of the plunge in home ownership rates that started with President Obama. So as interest rates go up, I believe you're going to have less and less people trying to get a home, and they're going to have to rent because they just don't have the down payment and can't afford the monthly payment that the banks are going to have with these interests. So rents will most likely go up, which is going to lead to a higher cost of living for workers and lower income folks. Goes on to talk about how Blackstone you know, helps raise rents. Them going around and buying all these properties up, or buying properties up that instead of being foreclosed on, they're able to go in and buy them. That way there's no, there's no home crisis. And in conclusion, he basically goes on. None of the effects of inflation in the economy can really be blamed on labor. And even Fox News said on this, Tucker Carlson, BlackRock, other investment firms killing the dream of home ownership, journalists say. The New York City Risk and Investment Management titan BlackRock is among several high-powered firms pushing working families out of the housing market and into rentals, therefore depriving them of capital and the opportunity to build credit and equity. They're pretty much purchasing entire neighborhoods and converting single-family homes into rentals, while in cities like Houston, investors like Fink from BlackRock account for 1/4 of the home purchasers. So just think about this. Think about what what home prices would be if it was more of an organic market with just home buyers being able to buy. But no, we've got these big firms coming in, buying these houses, inflating the prices quite a bit. The Federal Reserve's blaming it on wage inflation, saying wages need to be cut. That's the reason why people are having the access to all these homes. Well, give me a break. I mean, you can see all these companies here that are going in and buying these homes on the market to keep the market prices up. He further goes on to say home ownership gives a stake in society. It's a way to build generational wealth. It's the foundation of the middle class and part of the American dream, he said. Meanwhile, permanent capital like that, firms like Finks, are killing the dream and giving us a nightmare of dispossession. And in conclusion, he goes on to say the same institutions also promote progressive political policies like environmental policies that also raise the price of housing, and they push for more immigration like JP Morgan Asset Management, Gonzalez reported. So obviously, the more people you got in the labor field, the lower the prices are going to go for labor. Food, too. This is a great book. I think I'm going to buy this one. Foodopoly. You think about all the big corporations that are just coming in and buying all the food product and all the farms and cattle and chickens and everything. They can pretty much dictate what they want down the board. And it goes on to say here, the Reagan administration pulled federal antitrust cops off their beat. The federal government has been allowing giant mergers between competitors. As a result, massive consolidation has taken place in the food industry, given the meat packers, grain companies, food processing conglomerates, and the grocery industry unprecedented economic power. These companies stand at a battle knock between fewer than 1 million farmers and more than 300 million consumers. They lower the prices that farmers receive and increase the prices that consumers pay, giving more of the profits for themselves. Meanwhile, the cost of seeds, fertilizers, fuel, and other inputs is continuing to rise as these industries also become more monopolized. Most farmers are scratching by, trying to hold on to their land and eke out a living. We are losing small and mid-sized farms at a rapid rate, resulting in the consolidation of smaller farms into larger corporate-styled industrial operations with full-time managers and contract labor. So contract labor, too, is a way to keep their costs down. You're pretty much just getting an hourly wage and you're expected to pay all your benefits, taxes, and everything out of that. And your contract labor is usually for a specified amount of time. Goes on to say about Walmart, another huge corporation is so big that it has unprecedented power in the food industry. It demands value because it sells an incredible amount of each food product, much more than a small or medium-sized company could ever supply. For instance, Walmart buys 1 billion pounds of beef each year. So that company has control, and it wants control over the prices, but it also wants to be profitable. And many of Walmart's companies that it works with, they definitely must comply with Walmart's demands, or they just get the boot. Corporate Winona Honor also says corporations have gained a frightening amount of control over food by manipulating the genetics of life forms ranging from bacteria and seeds to fish and animals. They've literally gained control over the basic building blocks of life, threatening the integrity of the gene pool and our collective food security. Today, because of biotechnology is essentially unregulated, it's moving far into the realm of science fiction as scientists actually seek to create life. It's time to put a stop to this irresponsible pursuit. Science for profit. And then there's good old Monsanto Bayer Corporation. They love controlling the gene pool, the seeds. They definitely like forcing farmers across the country to pay for both patented seeds and the chemicals to grow them. 90% of America's food budget is spent on processed food, which is where the biggest food processing conglomerates like PepsiCo, Nestle, Kraft to make their money. The ingredients that give junk food their taste and texture are relatively cheap. The sweeteners, oils, and chemicals are big business, derived by giant multinationals like Archer Daniels Midland from corn, soy, cottonseed, and sunflower seeds. So, and that's and just looking over what's happened to the industry, she goes on to say we've lost 52,000 dairy farmers over the last decade because dairy farmers are not even making the cost of production. Very little of the money that is paid by consumers for milk ends up in the hands of the farmers. There's a lot of cooperatives involved, and dairy farmers are very vulnerable because of the alliance between these cooperatives and the milk processing and manufacturing industry. So even the meat, the food, how our food's processed, consistently getting more and more monopolized all the way up and down the chain. Let's not forget about health insurance here, guys. More than 40% of all rating in areas of states with federally regulated marketplaces have just one insurer. Premiums are likely to continue rising, especially in those states with more than one insurer, or with less than one insurer, or with just one insurer, I should say. Another reason for higher premiums could be imperfect competition sparked by the market. In early years of ACT, the Affordable Care Act implementation, insurers may have artificially kept premiums low to attract market share, acknowledging early losses in the process. Once they gained market share, became monopolies, they could raise prices. This pricing move may actually have been part of the strategy all along, inhibiting true competition. A major concern in the future is that monopolist insurers will continue to leverage their market power to propose large premium increases, with state regulators approving them to keep markets stable. Continued research to ensure competition is necessary to understand the impact of on enrollment, cost, and quality. Losing just one insurer from a marketplace increases premiums just 3% between 2014 and 2015, an insignificant sum. However, premiums have risen more and more quickly since 2015 without much research into the impact of fewer insurers in some markets. And then study finds insurance monopolies are a primary driver of higher ACA premiums. And this study, which was published in Health Affairs on Monday, considered 3 potential reasons for geographic variation in marketplace premium cost. 1, rating area health characteristic, providing providers ability to negotiate with insurers and competition among insurers. And the analysis concluded the presence of monopolist insurer was the strongest and most precise predictor of 2018 premiums in individual markets. Premiums were 50% higher in rating areas with one insurer and 20% higher in areas with 2 insurers, compared to premiums in rating areas with 3 or more insurers. Further goes on to say monopolist insurers were more likely to have raised prices than non-monopolists as well. Insurers that later became monopolists offered the lowest cost silver plans 28% of the time, the second lowest cost silver plans 50% of the time, and the highest cost silver plans 60% of the time. One of the goals of ACA was to foster competition. We all know that, but it's no longer viable in many areas of the country for sure. And that was from 2019, here from Fierce Healthcare. So anyways, just wanted to share a few thoughts. Definitely going around the bigger mainstream media companies. Hey, we need to get wages down. They're the ones driving up this inflation. But there's plenty of examples throughout this whole economy of why inflation is going through the roof and why it was, from printed money to monopolized markets to restrictions, production supply chain issues, you name it. And from what workers were still able to work, hey, their demand went up. From what workers wanted to work still, to show up at job interviews, yeah, their pay went up. People needed help, So just wanted to illustrate a few counter arguments to some of the Federal Reserve's narrative and big companies narratives out there that are just that seem to be running rampant. You know, it's pretty ridiculous to think that it's because of labor that inflation is the way it is. You know, when there's so many other factors in this economy, you know, causing inflation to go up and up. You know, when you've got banks and investment firms buying homes to rent out, to put together investment vehicles for the stock market or whatever, to generate yield, um, not good. It's not good for people. I mean, it's good for the few up top. It might be good for some pension funds, to have that money coming in on rental property. Um, that's put in a derivative or some kind of ETF, whatever. You know, but it's just not good for people in general. So anyhow, just wanted to throw those thoughts out there. Tell me what you think. Please comment down below. Like, share, subscribe. Interested to hear from you. And I'm going to keep on refining these. I got a lot more information coming out, and a lot more thoughts on what's going on in the world from religious, from power, and from monetary perspectives.